a terrific tactic to get you started in the right direction if you can't watch the market, or just knowing that the tactic itself is going to take care of a lot of what we've talked about in terms of follow through. This is a very important tactic, because what most individual investors or traders even don't realize is that quality risk management begins with order entry. When you step into a market, it has a decided outcome on where you finish, right? You have an entry price and an exit price. So you need to make sure that you get good entries, good fills. And so buy stop limit orders become important. And so this is just a definition from Investopedia. It's an order placed with a broker that combines the features of a stop order. That's the most important part of it, is the stop. That order says stop buying at this price or below. Okay. And so what that means is price has to supersede it. It has to go above it in order to trigger, in this case, a market order. And when you attach the limit, that sets a price above the stop entry order so that you don't potentially pay too much. Okay, so it says here, a stop limit order will be executed at a price specified or better after a given stop price has been reached, which we just covered. Once the stop price is reached, the stop limit order becomes a limit order to buy or sell at the limit price or better. And so that's kind of where that market phrase I said came into play, in that you'll never pay more than your limit, but you're going to pay somewhere between your buy stop and your limit price in kind of that window of pricing that you specify. The only coaching I'm going to provide here is don't get too cute with your limits, particularly on explosive days. The limit is there just to prevent what I would call a catastrophic fill, like a stock that gaps up 127% and the next likely move is lower, So you just want to prevent that situation more so with the limit. The buy stop is the most important part. Make sure you catch a rising stock. The limit is nice just to make sure you don't get some kind of weird fill. So typically, 50 cents to $1, depending on price range. When you start to get up into the $400, $500, and $600 stock prices, there are still some out there. Don't get that cute, just use several dollars, or, don't get yourself out of a bad opportunity by limiting too much, is the main message. You got to use your own judgment there. But this is an example of how it works. So we had a market that was coming down, down, down. Here we have kind of a nice reversal day. And, we don't really know how good that day is going to be till it closes up, right? So it opened the next day. And this would have triggered an order, though, off of the prior session, had we witnessed the hammer, had we witnessed the high price for the hammer and said, hey, look, I don't want to buy this stock unless it goes, 12.5 cents or 12 or 13 cents above that high price, which it did the next day. Okay. But that same tactic could have even been done on the high price of this candle, where some of you would have been a little bit more sure that, an order looks to be in order here. Sorry for the play on words. But, simply put, we like to use the high price when we're just doing it on a ad hoc basis here, not to a defined technique. So 12.5 cents above a high, make sure that the stock price is doing what you want it to do, and that's rise when you catch a fill. So it would have done it on this bar, as we indicate here. It would have done it on the next bar. It would have done it on the next bar. And so far, so good, right? Prices continuing to follow in that direction. And that's what we're trying to achieve. Okay. So the high price there was $48.97. We could have used the 12.5 cents in anticipation, or actually seeing limit up in the futures and knowing that if the futures continue the next morning, quite strongly, that we'd be willing to float an order out there. But this would also work in situations where even you receive a confirmed up call and you want to be extra sure that the stocks that you're going to buy are continuing to rise. You might even just go off the closing price at that point, but something to indicate that prices are going higher the next day.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.